Gautam Adani. That's one name we bet you've heard more than any other this week. Gautam Adani was till a week ago the richest man in India, also the richest in Asia. At one point, not too long back, Adani was even the second richest person in the world. But as we speak, he's been struggling with an unprecedented crisis. While Adani's businesses have lost more than $100 billion in barely a week, Adani himself has lost around, $57 billion in personal wealth, dropping out of the top 20 list in the richest people in the world. Also, his group is facing one of the biggest stock market sell-offs in the history of India. I don't think this sort of a drop in just a week has been seen in a long, long time, if ever. Now, the obvious question that many of you have been asking is, how did all of this happen? What is the fine print? What lay behind all of this? And we'll try and explain some of that to you. Essentially, it's a David and Goliath story. The story of a little-known firm taking on one of the richest and most powerful men in the world. This firm has accused Adani of market manipulation. Its name is Hindenburg Research. Hindenburg, well, it's a small New York-based research and trading firm founded by a rather well-known by now short seller named Nathan Anderson. Neither the man nor his company has been particularly well known until recently, except when they started coming out and taking down a large number of companies. Nikola was one of its most recent scalps. Now, before I go any further, I think I should tell you what exactly it's short selling. But normally, you buy shares in a company hoping that it's going to go up. A short seller sells shares or bonds in the hope that their prices will go down. There are all sorts of technicalities in how this can actually be done, which I'm not going to weary you with right now. So the long and the short of it is that Hindenburg Research took short positions on the Adani Group, or to be more specific, short positions in some of the bonds of the Adani Group, betting that their prices will essentially go down. And then, on the 25th of January, Hindenburg Research published a 100-page report. It accused Adani of, quote, pulling the largest con in corporate history, unquote. The report said, quote, Adani used a web of offshore shell companies in tax havens to inflate revenue and stock prices, even as debt kept piling up. All of that basically meant that the Hindenburg Research was saying that the Adani Group was not worth what it was, and it was also saying that there were several irregularities. Was Hindenburg correct? Well, absolutely not, said the Adani Group, coming out with its own 413-page rebuttal and saying that all of this was nothing but an attack on India. Don't wrap yourself in the national flag by looting the country, replied Hindenburg, and the story continued. So who's right in all of this? Well, obviously, these are matters that will be eventually decided by regulators and market authorities and perhaps even the courts if there is a libel action and somebody sues Hindenburg. But in the short term, if the intent of Hindenburg was to profit from a drop in the value of Adani companies, then boy, did they rake in and did they cash in? Because down went the value of the Adani Group after the publication of that report, and in a dramatic fashion. Between the 25th of January and now, Adani Group shares have fallen like a pack of cards, a pile of rocks, call it what you will. This is an unprecedented collapse. This is the Adani Group's website. It says the Adani Group has businesses across sectors. In which areas? Well, just about everything. Energy and utilities in particular, but also transportation, logistics, defense is there, incubation is there, airports, materials, hydrogen, green hydrogen, among others. There are a large number of sectors that the Adani Group is in, virtually every sector if you really care to think about it. Now let's look at the companies, which include some of the recently acquired companies, cement giants like ACC and Gujarat Ambuja Cements, and of course the media company NDTV. When you look at the major companies, first there's the flagship Adani Enterprises, which has been at the center of all of these headlines in the last 1 week because of that FPO, which was subsequently called off. Adani Enterprises deals with natural resources, with defense, with aerospace, even airports. It incubates many of the Adani Group's companies. The Adani Group, under the banner Adani Airports, for example, has won the mandate to modernize and operate at least 6 Indian airports. You then have Adani Ports in SEZ Limited. SEZ stands for Special Economic Zones. This company manages ports, terminals and logistics. Then there's Adani Green Energy Limited, which claims to be the global #1 solar power generation asset owner. There's Adani Total Gas Limited, which sells PNG or pipe natural gas to commercial and residential establishments. Also CNG or compressed natural gas to India's transport sector. And then there's Adani Transmission Limited, and there's Adani Power Limited. Basically, you get the general idea. This group has a vast range of interests. There's another company that deals with cooking oil. They are now listed companies, two of them, as I said, in cement and NDTV in the media. Real estate is also somewhere in there. Now, all of these companies are listed. They are public. Adani Enterprises was the first to be publicly listed. Others followed, with Adani Wilmar being the latest edition. Its IPO was in January 2022. Essentially, one of the very important things to be noted is that because these companies are listed and they are public, they are subject to public scrutiny and also the scrutiny of regulators such as SEBI. However, one of the things that needs to be noted also is that their ownership or their public float is somewhat small. Not too many of their shares are owned by either the public or by mutual funds, and that is one of the things that Hindenburg Research has been pointing to. Having a very small float can mean that the prices can rise very fast. It can also mean, as we've been seeing in the last 1 week, prices can drop very fast. That's one of the important things to keep in mind as you discuss the Adani Group. What is the free float of many of their companies? Now, as Adani supporters have been saying, whatever you may say about stock gyrations up and down, there are many companies in there and many of them are solid businesses. There's annuity income in sectors like infrastructure. Even Hindenburg in its report didn't exactly argue with the fact that many of these businesses may have some value in them or they're doing solid businesses. The essential Hindenburg question was on valuation, and in particular the meteoric rise of Adani Group shares in the last 2 to 3 years, and whether that small float had a major impact in that. Let's just take a look at a couple of examples. This, for example, is Adani Enterprise. By November 2022, that is what had happened. Look at where the stock price was just 3, 4, 5 years ago, even a couple of years ago, and then it was 4,000 rupees, give or take, in November 2022. And this is a pattern that you will see in Adani share after Adani share. If you look at all of these companies, in the last 2 years, they have seen a massive rise in their prices. And then, after the Hindenburg Research is out, that has all suddenly come crashing down. It's still not come all the way down to where the companies were just a couple of years ago. So let's remember that. Even after this carnage we've seen, most Adani Group companies are still substantially higher than where they were even in 2019 or 2020. Okay, so what does all of this mean for the Adani Group? What does it mean for India? What does it mean for the world? And what does it mean for Gautam Adani? Well, let's just start with the world part of it. By the way, there are some international repercussions that are already starting to be felt. We've just heard, for example, that Joe Johnson, the brother of Boris Johnson, has just quit as a director in a company that has some links with, it's been named in the Hindenburg Research also, Elara Capital. There's been some talk about its exact association with Adani Group companies. Joe Johnson has just resigned from there. And that is just one of the many things that you could see in other parts of the world. When you have a crash like this or a major crisis like this, there's almost invariably going to be some international repercussions. But let's just come to some of the other questions we should be keeping in mind as we track the Adani saga over the next week, 2 weeks or 3 weeks. Question number one is around the value of the stocks. Now, quite frankly, the stock markets aren't necessarily the best judges of anything. You can have stock prices going up way more than they deserve. Then you can have stock prices falling again way below what they deserve. Stock market gyrations will be there. And the Adani Group essentially and the Hindenburg are going to be arguing a little bit only about stock valuations. Adani Group's been saying we are championing growth with goodness. Hindenburg says that the growth is all gas, essentially. Hindenburg has won round one when it comes to stock prices. Is it now going to book profits and move on, or is there a longer battle ahead? So that's question one. Question two, what do the regulators make of all of this? And perhaps to the risk to other institutions in India, to banks that could be exposed, to the LIC and so on and so forth. That's why earlier this week, India's market regulator reportedly began probing this fall in shares. India's central bank decided to look into the exposure that Indian banks have to the Adani Group. Lenders to the Adani Group, by the way, include Punjab National Bank, IndusInd Bank, among many others. Question 4. Will there be any contagion in terms of credit risk generally in India? Is there any risk to the Indian economy? Are people going to say, well, we are worried about the Adani Group? Like we've seen, for example, units of Credit Suisse Group or Citi have stopped taking certain Adani-linked collateral. Is that going to become a broader question around India? Most experts think it is really unlikely. But I think that is something that needs to be watched. Are other Indian companies going to be facing any problems because of whatever is happening in Adani? If you look at the stock market, by the way, nothing has happened to other Indian companies. It's largely been Adani Group companies only falling. There's been no contagion elsewhere. Question number 5. What does this entire fracas mean for the actual businesses in the Adani Group? Are they going to continue to grow? Is there going to be a financial crisis? Is there going to be a real effect because of whatever's happening in the stock market? Now, Gautam Adani had to pull a stock sale worth $2.5 billion at the 11th hour. This was after the offer was fully subscribed. Here is what Gautam Adani himself has had to say about all of this.
After a fully subscribed FPO, yesterday's decision of his withdrawal would have surprised many. But considering the volatility of the market seen yesterday, our board strongly felt that it would not have been morally correct to proceed with the FPO. In my humble journey of over 4 decades as an entrepreneur, I have been blessed to receive overwhelming support from all stakeholders and particularly the investor community.
So let's put all of these questions now to Mark Matthews, who is the Managing Director of Julius Baer, joining us from Singapore. Welcome to the show, Mark. Thank you so much for joining us. You know, as somebody who runs Julius Baer, I'm sure it must be almost personally hurting you when somebody loses, what is it, 40 or 50 billion dollars of wealth in something like a week, which is what has happened to Gautam Adani.
It doesn't hurt me personally. It's not my money, but you're right, it's a lot of money.
What do you make of this entire thing? The sort of selling that we have seen in the last 1 week is massive. What is your take on the overall situation, Mark?
Well, on the one hand, I'm glad these sorts of short-selling research houses exist because they do write negative research, which the investment banks are usually very reluctant to do. But on the other hand, they can create sort of witch hunts and panic situations. And I think we're in a little bit like one of those now. The market has clearly panicked, and everything in India seems to be guilty until proven innocent. And I actually think that presents many opportunities. They seem to be being taken advantage of now. I'm looking at the price action. A lot of things are rebounding. So anyway, I think it'll prove to be a storm in a teacup longer term.
Mark, you seem to be saying you think it's going to be a storm in a teacup. So you think this is a temporary issue that has happened, and for Gautam Adani and the Adani Group, I'll come to India itself in a couple of minutes, but for the Adani Group, you're saying this is a storm in a teacup, and eventually the companies will do well and the stock market will recover and things will get back to normal. Is that what you're saying?
Well, that's several different things. The stock market will do well, that I do know. As for the Adani Group, I personally think that the company is not going to disappear. It's got some very big and good quality assets. It's got good sponsors. It has cash. Yes, it has a lot of debt, but it also has cash.
Mark, I think if I can paraphrase what you're saying, and this is what many experts have also been saying to me in the last 3 or 4 days, there are some solid businesses in the Adani Group. They own a lot of assets, and as a result of that, you can't say that there is no value in there. The question, of course, is the valuation. Were they overvalued a week or 10 days ago or a year ago? Are they undervalued now? That's a question of price, which has to be determined at the stock market, and no one is completely clear as to what the correct valuation is, but there are some solid businesses in there. Is that what I heard you saying?
100%.
All right, you want to elaborate on that? Because this sort of price discovery can be quite painful, right? 50% down in a week.
Yes, and another problem is that the investment banks really don't cover these companies, very few of them. So it's hard to know really what the correct valuation should be. There's not a lot of research on these companies, and that does make the price discovery more difficult.
That actually is one of the things that was picked up by Hindenburg. They almost had it as a black mark against the group, saying, here you have a $150, $200 billion group, and why is there no research on it? Does that happen in your experience, that it can happen that sometimes a group can rise very fast and there's not much research on it?
Oh, yes. And the reason why is obvious. It's because the free float is small. And so there weren't a lot of institutions. Obviously, research is written for institutional investors. There weren't a lot of institutional investors who owned it or who own it now. And that's why we don't have the same depth of research that we do in the more widely held companies.
All right. Thank you so much, Mark, for joining us. Such a pleasure.
Thank you.
Thank you. And for another perspective on that really big story this week, I'm now being joined by a well-known market analyst, Himendra Hazari. Himendra, thank you so much for joining us on this program. Just wanted to understand, look, we can discuss what's happening on the fundamentals of the Adani Group and where that's going and what that means for India. But first of all, the stock market crash that we have seen in Adani Group's shares. Do you think it's gone on long enough? Many stocks are still locked on down circuit, like Total Gas and Transmission Power. One or two of them are still on downward circuit. Adani Enterprises has seen a lot of volatility. It was down 25-30%, bounced all the way back up. What do you think is going to happen to the stock prices here?
One must bear in mind that the increase in the Adani Group share prices in the last 2 years has been spectacular.
Yeah.
On average, I think they've increased by about 819%. So if one assumes that the normal price was before it started its rise, then we really don't know where the bottom and where the normalized price range could be. Because it has to be remembered that the Adani Group, which are listed, they have very limited floating stock. Indeed, one of the objectives of the follow-on public issue was to broaden the investor base and to get retail investors in. So when the rise has been so spectacular, the fall can also be equally spectacular. So that is what has to be considered by investors before they take a decision whether to buy or to sell the stocks.
I think you're making a very important point, Mr. Hazari, and I just want to make sure I understand that. We were referring to that a little earlier as well. When there's a small float, when there's a thin float, it is possible you can have stock prices jumping up 8 times, 10 times, 20 times, and we have seen that in Adani Group's shares in the last 2 years. That same thin float means that you could be having this sort of a 50-60% drop in a very short period of time because, there's not enough float in the market. Is that essentially what you're saying?
Correct. But one has to see that in this decline that we are seeing currently, that the volumes are massive. See, because earlier the volumes when it was rising were not so massive. Now there is a lot of, whether it must be speculator interest, but it is coming down with very heavy volumes. So it tells you that there is a genuine push there to push the share prices down.
It's often said that whatever happens at a stock market is not often connected with the actual, how the companies are positioned and how well they're running their businesses and how solid the businesses are. Stock prices can gyrate out of sync with that. Do you think the companies themselves could come under stress right now, repaying loans, raising more money? Does all of that get affected by a stock market crisis if it's a purely stock market crisis?
Most definitely, yes. Because when the stock prices was going up spectacularly, there was really no fundamental reason why these stocks were going up. But because of the Hindenburg report, there are justifiable concerns, and the Hindenburg report is very specific. It is backed by and supported by documentation. So today there are significant concerns which can cause the share price to come down, because there are corporate governance concerns, there are fundamental concerns. And when the share prices and the bond prices collapse like the way they are, that means for these companies, the capital market doors have been slammed shut, and they need, liquidity to manage their day-to-day operations, as well as to manage and to fund their huge capital expenditure plans. Now, in my view, all this will have to be curtailed, because today only the Indian government banks can handhold the company when they need liquidity. Also, there is a lot of concern that if these Indian government banks increase their exposures, their own bank shares will start, collapsing. So therefore, it is absolutely important that Adani Group now consolidate, they give up on their major capex plans, and they may even start considering divesting their assets, because today for them, liquidity takes precedence over growth.
All right, Mr. Hemendra Hazari, thank you so much for joining us with that perspective. Thanks a lot.